Hello everyone. Today's video is all about helping NRIs make smart mutual fund decisions in 2025. But before I dive into the investment options, I have got to share something which is a surprise for you. There's nothing called as best mutual fund. Now I know it sounds controversial, but please stick with me till the end as I want to give you exact real data on why that is true. Also, till the end of this video, I will give you some mutual funds which you can use to start your mutual fund journey in 2025. So let's get started. Now let me show you something interesting. I have got this fascinating data from the last 5-6 years. Now as you can look into this chart, the large cap category shows some mutual funds and their corresponding ranks in the previous years. Let's take the first mutual fund, which is Tata Large Cap Fund, which had a rank of first in 2021. Now if something is rank 1 today, what was its rank 5 years back? And the data might surprise you. Tata Large Cap Fund was ranked 16 5 years back, which is almost in the bottom quartile. Now what does this show? This shows that if something has a rank 1 today, it wasn't rank 1 few years back. And what if you selected something which was rank 1 few years back? Will that stay the same rank? Absolutely no. Let's take the example of Nippon India Large Cap Fund. Now in 2017, its rank was rank 2. But if you were to look in the year 2020, its rank actually dropped to 29. Now what if you would have selected Nippon based on its rank 5 years back? Would it actually give you the returns? No. So as this data shows you for large cap category funds, their ranks always keep on changing and the winners always keep on rotating. Similar thing is with mid caps. Some mid cap which was rank 18 is now rank 1 and some which was rank 6 is now rank 7 or rank 23 also for depending on the years. And the similar thing also lies for small cap funds. So you can pause the video and look into this table to understand actually if somebody is making a video based on their ranks and asking you to invest in those mutual funds, it's likely that the same fund might not remain in the same rank and you might actually not be able to beat the benchmark and make better returns. So now we understand these ranks are irrelevant. But now you might be wondering, if there's no best fund, Alok, why are you making this video? Well, because I want to share with you how we actually think about building a solid mutual fund portfolio. It's not mainly about chasing the past winners, but it is mainly understanding these three things. First is your asset allocation. Now think of a balanced diet. You need all the right ingredients in the right balance. So similarly in markets, when the markets are expensive, which they are now, you definitely need something which protects your downside volatility. That means if markets correct tomorrow, your downside of the portfolio should be protected. That means you should have good proportions of fixed income, FDs, debts, bonds in your portfolio also, along with gold and some commodities. And this can be only achieved through a mutual fund category called as Balanced Advantage Fund. The purpose of Balanced Fund is to give you exposure into these three categories of assets, but at the same time keep on changing the proportion depending on how the market is valued and what is the asset class which is going to give better returns going ahead. The second thing that you should keep in mind is about valuation. Now let us look at these numbers. As you can see on this screen, mutual fund is mainly divided into the top 500 stocks in the stock market. And the categorization of these 500 stocks is known as large cap funds, which is the top 100, mid cap fund, which is the 150, and the small cap, which is the next 250. This 500 comprise of the entire mutual fund universe, and their respective benchmarks are the indicators of how these sectors are going to do. Now, as you can see from this table, Nifty 100, which is the large cap category, has a PE ratio of 24.8. Now, what is PE? PE is mainly the price to earnings ratio of that index. That shows that how overvalued or undervalued that index or that investment might be. So as you can see for Nifty 100, the PE is somewhere around 24.8. For mid cap it is 32.4 and for small cap it is 28.7. In the second column if you see, the numbers are the 10-year averages of their respective PE. So usually large cap funds have an average PE, or large cap as a category has an average PE of 21.5, mid cap 26.8 and small cap of 23.4. So that means Large caps are slightly overvalued by 15%, mid caps by 21%, and small caps by 23%. So, what does this show us? It simply shows us that investing into large caps might be slightly stable going ahead as compared to investing in mid caps and small caps. So, any fresh money that you are looking to invest today and your asset allocation is already right, then put that additional money into large cap funds as a category. Now, the third thing which is exciting is the sectoral opportunities. Let me show you again a table which shows the mutual fund sectors where the mutual funds park their money and also what are their PE ratios. That means what are their approximate valuations. As you can see in this table, the defense sector, which is represented by Nifty India Defense Index, has a PE of 45.6, which is way above what a usually PE should be. At the same time, if you see consumer durables, FMCGs, their PE is somewhere in the range of 35 to 40. But if you see categories like public sector entities, public sector banks, oil and gas, private banks, metals, they are very good valued. Now the PE of this indexes is very low if you compare the PE of Nifty 50, which is 22. And this shows us that if your asset allocation is right, if you have already made good investments into large cap as a category and you still want to take some risk and try to generate some excessive returns, these are the sectoral funds that you can look into. And our personal favorite today is Nifty 50 Bank. Why? There are two main reasons to it. One, as you can see, the banks are very undervalued and have a good potential going ahead because their businesses are very solid and India is on the path of financialization. But the second most important thing is banks have always been the favorite of foreign investors. Now we know that in the past few years, foreign investors have sold a lot of their holdings because of the valuation and currency depreciation. But once the economy stabilizes, they would start inflowing more money into Indian markets and most of their wallet share will come into banks and financial services. So let me break it down into three simple options and please hold on because I'm going to tell you exact funds where you can make these investments. If you are the careful type who doesn't want to take too much risk, go for balanced funds. They are like professional money managers balancing your money into all asset classes. If you already have enough exposure into balanced fund, start looking at large cap funds. And if you want some extra risk and some extra return in your portfolio, look at banking sectoral funds. So which are these funds that I'm talking about? Let me take you through my screen again. As far as balanced funds are concerned, Edelweiss Balanced Advantage Fund has been one of our favorites. If you can see, the fund is very less volatile as opposed to its benchmark, and at the same time, it has delivered double-digit returns in the past 5 years. The fund has a track record of more than 10 years, and if you see its portfolio, it has good allocation into debt, equity, gold, and stable companies. So this is fund that you can definitely look into if you're planning to invest in Balanced Advantage Fund. As far as large cap funds are concerned, Franklin India Blue Chip Fund is the fund which you can look at. The fund comes at a slightly lower expense. It is one of the oldest fund in the market which got launched in 1993. So it has a 30-year track record also. And if you see, it has almost beaten the category average that usually comes into this fund. And the quality of the fund managers we personally know is very better and you can always look into large cap for this fund. And third fund for banking and financial services is Nippon India Banking and Financial Fund. Now this fund again, as the name suggests, makes a portfolio only into banking and financial services as a category. If you see, the holdings in these funds are HDFC Bank, ICICI Bank and all your top banking companies which are related to financial services. The fund has delivered a great return. It has a track record of more than 10 years. And this is the fund that we are very confident in sectoral category will give the better returns going ahead. So I hope this video was helpful. And if you are an NRI who is looking to start his mutual fund journey in 2025, please feel free to reach out to us. We have been managing more than 350 crores only in mutual fund for NRIs. And we also specialize in taxation, insurance, and any of your finance needs. Also remember, mutual fund investments is not about finding one perfect fund. It's about building a portfolio that helps you sleep well at the night while your wealth still grows. Let me know if you have any questions about the three funds that I discussed or any other fund that you might be looking at. Put them in the comment and I'll be happy to answer you back. Thank you, and I'll see you in the next.